Today, I'm going to give you the simple swing trading strategy that made me $34,000 this past month. I'm going to give you the one indicator that could give you the highest chance of success, the proper game plan, as well as how to manage your risk and how to pick the right options. If you've been struggling to be profitable, this small, simple system could help you get over that learning curve. But as you know, I've been on vacation, and the reason I keep saying that is because I want you to have a strategy that is so obvious you would take it without a doubt and have that conviction even if you were busy on vacation. I want you to have so much conviction, so much confidence in one single thing that you know it's going to make you money. And I want to give you that confidence today. I want to give you the way to look at the markets with what I've been seeing. You're welcome. Here's a shirtless pic of me. Don't say I didn't give you anything. But let's go into the actual framework of this. So over the past 30 days, we've used this one indicator to time the market. And if you've been on the YouTube channel, you've known this is all on YouTube. April 5th, we've called the bottom, and in a single week, that one stock I gave you ran 70%, which was FNGA. You can see 3 weeks ago, we gave you that stock, as well as the triple Qs, Bitcoin, Soxel, all my favorite stocks, but FNGA was the one you needed to focus on. And from that bottom, with that indicator, we were able to make majority of the profits I showed you earlier. And the current weekly move we're seeing right now, we predicted a pullback using the same indicator. And what's the market doing today? It's pulling back. The daily candle looks ugly, and the weekly candle could get even worse. So this indicator is unlocking a lot of winning trades just off this month. And I want to teach you how to read it. So we're going to teach you the strategy today. We're going to show you the indicator. But as for the proof, we put out this trade 1 day ago. It's a hedge on the market, SQQQ. It's a good way to hedge with a 3x inverse if you don't want to use options. But I'm going to give you the option strategy today, which is going to be even more exciting. So the indicator you want to focus on was talked about on the video 2 days ago, but I'm going to go over it fully in depth, as well as just show you how to set it up so you don't have to basically stare at the markets. You can get alerts, save your time, and just basically take trades whenever the email or text alert comes through. It's called the S5FD. All you want to do is go to Tradingview, type in S5FD, and it's the S&P 500, the 5-day moving average, how many stocks are above it or below it. And this will give you a percentage of those 500 stocks. So super, super important. This measures market conditions. It measures really discounted market, meaning if everything was falling and everything was under the 5-day moving average, you want to buy that market. It measures a frothy market, the one you know is going to reverse. That's how we called this short-term top in the market 2 days ago using this indicator. But if you read these extremes, that's how you can put on great trades because it's an early warning system. And if you have a portfolio that you want to protect, this can actually help you hedge the portfolio and be prepared for pain that's around the corner, or maybe the best buying opportunity right in front of your eyes that you want to get into. It has very high accuracy because markets can't stay beaten down forever. They can't stay bullish forever. Even in a true bull market, you're going to have tops and bottoms that you could trade. And even in this current market that's been falling, there was a lot of tradable opportunities as the market was falling, which I'm going to go over how you could have read the indicator to do that. But as you can see with my indicator, I just put resistance on here with this purple box at 90 to 100. Obviously, you can't have more than 100% of the stocks over the 5-day moving average, so I stopped it there. But 0 to 10 is where the other range is that I look at. So obviously, you can't go below 0. That means, none of the stocks are bullish. Negative stocks, which doesn't make sense. So as long as you understand how the range works, you could trade it. But the beauty is, When you hit the extremes, you trade the extremes. Whenever you're under 10, it's like the most obvious buy signal you're ever going to see. And if you spend 2 days around the 10 level, you just buy that market like hotcakes. And with the option I'm going to tell you, you could double or triple your money. Same thing for the 80 to 90 level. If we're at 80 to 90% of the stocks bullish, we want to be basically hedging or buying puts. So if you do that correctly, you're going to get a pretty extreme reversal. And just for an example, the stock, or should I say stock market, I just messed around with a day trade, and it ran to the max 150 to 200% return. So basically my trading capital is like 50K if I was to day trade. I could have tripled that. I could have made $100,000 today just buying puts because of the market conditions, because the S5FD was in my put position. So you can even go super short term with puts. And just like you could see inside the Discord, the puts ran like crazy amounts. So I'm going to go into how to set this up so it could be more autopilot. Basically, you want to put on your alerts because of a couple reasons. Number one, the indicator doesn't print until the day's over, which is kind of weird. So at the end of the day, the indicator posts how it moved. And maybe there's a different indicator you could use, but that kind of changes the game because you need to put on your alerts because obviously the market's closed. You're not monitoring it. So it's best to put on alerts because you're not going to get them till like 2 p.m. MST or 4 EST. But set your thresholds for 80 to 10. Well, above 80 or below 10. And I'll show you how to do that. S5FD, you just right click the screen and add alert. Anything over 80, you want to click every time, and then you want to go to your notifications and you want to put on whatever you want. Apps, email, you have your phone. So your phone is your app. You can have it sent to your phone as well. And you can do webhooks, which is fun. So webhooks can go to like your Discord if you run a Discord. And if you make this every time, you don't have to remake it. It'll always trigger for the rest of time. You just want it crossing above, so crossing up, I guess, over 80 or below 10. 10, I'd say 15 is probably the lowest I would check out. So crossing down under 15. If you have those two alerts, that'll tell you when to buy puts and when to buy calls. And this is the simplest swing trading system I've ever put out a YouTube video on. And it's way more passive because you don't have to watch the market for a setup. Basically, you get the market extended at a certain period of time and you execute that extension with this option play I'm going to give you, or you get this, downward discounted market that has the S5FD under 15, and then you buy the calls. So setting alerts is the game changer because it's going to save you time. It's going to make this more autopilot. And from there, here's really simply what you want to do. You want to be buying calls 7 days out just for safety. As you saw inside the Discord with some of our day traders, we even gave this to some of our option selling coaching students, but we put on like a 0-day trade that ran 200% because the S5FD triggered bearish on Friday, so 2 days ago. So you can squeeze that expiration date if you're feeling frisky, but don't go too short early in your career. Make sure you always master the boring stuff. Try to hit like a 30-day expiration and then size it down to 10, and then 5, and then 3, and then 1, and then 0. So always start with risk low, and then as you understand the system and the risk of the winners and the losers, and you see the data points over time and how the system works for you, you're going to execute better the riskier stuff. So never jump to risky in the beginning. I think 7 is a perfect mix of risky and safe. But eventually, I want to be using ones and zeros, one and zero DTEs, because that's where you can make substantial money. That's why you can see a 200% push in a day, and that's obviously being out same day. There's some peace of mind rather than swing trading. So eventually it becomes a day trading system. But the other alert you're just going to play is the bearish alert. So if we hit 80, which we recently hit, you're buying puts 7 days out. And then you're targeting 1 to 200%, which can happen on the swing trade. Basically, the market hits, I think I have this down here, but you can pair this top to bottom, the S5FD and the triple Qs. The market hit 10 for the S5FD at this bottom of 430 on the triple Qs. So this is important because we ran 40 points in 5 trading days. And I bought some small amount of options that ran over 200%, and those were 30-day out options. So you could have made 400%, 500% on a 7 DTE off of this move to the 10 S5FD reading. You buy calls here. That move was insane. Same thing for here. The market hit sub 10 3 times in a row. 1, 2, 3. You could have bought every single candle. And this Trump tweet rip went from 420 to 460. So if you're 7 days out, like I said, that's like a 400% return because it's such a huge move. And here was the top of the market at 90. As you can see, if you bought puts there, you did the exact same point reversal, 470 to 430. That's another 200-300%. This market is a trader's market. It's so easy to make money with this indicator because the volatility is so high. So I'm glad I'm able to put out this video because this is the time to maximize the trading. So let's go over the less sketchy option. If you don't like the risk in your portfolio of short-term options, you can use credit spreads. Basically, if the S5FD hits 80 like it did recently, we just hit 80 right now, you put on call credit spreads, which is a bearish position. If you don't know anything about credit spreads, you're just looking to take advantage of time decay. So we look at a bear call spread on the triple Q, and you're looking to just place it like a same thing, like 7 days out. So same thing as the long calls, except credit spread wise. And usually like $5 wide is fine, $3 is wide, but you can make 50% return on this type of trade here. Or you could even make like 30% if you want less risk. Or you can see here the 485 and 490s. These can make a 1 to 4 risk to reward. So you can make a 20% return. So it depends on your risk tolerance, and the chance of profit could be as high as 80, 60, 70. And the lower the number goes, the more you can make. It just, again, as you start doing this, you'll start figuring out what's right for you. But if you put this on, it's much easier to make money with the credit spreads because with the S5FD, it's not going to give you a signal all the time instantly. Sometimes, like I said earlier, it's going to end up at this point stalling at the 90 mark or the 80 mark for a couple days. So if it stalls, that's where the credit spread would be better. But in some cases like here or the bottom down here, it absolutely ripped and made you money in a single day. So it's a mix on your risk tolerance and what you're comfortable with. But a credit spread will allow you to be right even if it's wrong or even if it chops and it continues, because you're still making money from time decay. So like this green candle that ripped here, the S5FD triggered at that point and we went higher. So your credit spread would have still made money because it's decaying, but your put option, if you bought puts up here, we still need to wait for that one to profit. So that's one simple tweak to just be safer with this strategy. But the beauty is, if you're doing credit spreads, you're passively hitting like a 30 to 50% return. But if you're trading the long options, you're obviously hitting double or triple that. So it's just a balance of what your goals are. Never shoot for too much just because the numbers are higher. Try to start, like I said earlier, lower risk, start with credit spreads, and then work your way to buying long calls, long puts. But even 30% a month, people don't do the math in their mind, but that's like tripling or quadrupling your account in a year. And well, I guess it's like 100% of your account in a month if you did it weekly. So you could 1,000% your account apparently with credit spreads in a year, theoretically. So even just the low risk stuff could beat the market returns, help you replace your income just with low risk. But the reason why it's not likely you're going to hit 30% every week is because this indicator does not trigger every week. Unfortunately, it probably triggers once every 10 days. So you'll probably have 2 trades a month where it becomes obvious. So if you want to collect income, if you want to do this safer, this is the way to go about it. And the last thing we're going to wrap up with is just talk about why this is better than everything else on the internet. Basically, if someone teaches you this crazy complex strategy where you need like a 3-bar system and you need like the MACD crossover and you need like an EMA touch, like you're not going to get that set up very often. And most of the time, you're going to take B setups or C setups because you're bored. You're not getting a great setup all the time. And if it's so complex, it takes a while to actually learn it. So this strategy beats everything else on the internet because it's a simple indicator. It's hitting a simple number with a simple option choice. 7 days out, at the money, you buy calls, buy puts. And if you want to do credit spreads, that's a step higher. It's a little bit tougher to figure out, but this beats everything because it's so simple. And it also helps you proactively prepare for the reversals instead of being late. You don't want to be late to moves and then have it reverse against you because the late traders are always getting wrecked. Lastly, trading success won't fall into your lap. You're not a YouTube video away from being profitable, but if you want to make the dream a reality, it's better to have somebody that can give you everything and coach you through the system. So fill out a coaching application with the link below. Put this opportunity in your hands and stop hoping the YouTube videos are enough. At the end of the day, I probably give you 5-10% of what I really know and what I give the students on a daily basis. And I want to take you to the next level like we took Tamara, where she hasn't sold any puts ever. In just 2 weeks into our put selling, she made $1,400 with looks like 25K. So 5% in 2 weeks. That's not bad for a complete beginner that just started selling puts. So I'll see you guys in the inside. I'll see you on the next video. And I'll link a video to the right of me. On the bottom, we called out if you want to actually watch how we called it out, why we called it out, and what we picked to trade off of. Peace.